Our work culture in America is changing again. We went from the Great Resignation to quiet quitting to a new trend today called loud quitting. Now, if you're like me and you've never heard of the term loud quitting, let me read you exactly what it means from Good Morning America. Loud quitting is when people aren't just unhappy at work, they're resentful that their needs are not being met and they're acting out on that unhappiness. Workers in this category tend to undermine what the organization is trying to get done and share their discomfort with others in the organization and even outside the organization. In other words, loud quitting is people who are going around telling their employees that this work sucks, I don't like my job, this is too much hard work, I don't want to be here anymore, and then they're posting on social media that my company sucks. Here's the thing, there are two factors that allow these types of employment trends to happen. Number one is an employee's perception of their work, and number two is the employment climate. Now, if we start with an employee's perception of their work, if an employee feels overworked, undervalued, and underpaid, they're going to want to make a change or do something to potentially undermine their company because they're not happy at their job. But they only have the real ability to do that comfortably when you have number two, which is an employment market which facilitates these types of employment trends. Right now in America, we are seeing the strongest labor market that we have seen in decades. There are more job openings available than people who are looking for a job. If you are unhappy with your job, or if you don't like your work environment, or if you don't like going into the office, or if you don't like something about your office, you can quit. Or you could be fired, and it's not that big of a deal because there's 5 other job openings out there. Now, are they the perfect job openings for you? Maybe, maybe not, but there's still job openings out there because employers are looking for employees and there aren't enough employees out there. Now, from a purely economic standpoint, this is where it's important for you to understand how we got to this situation in the first place, because the reality is that this job and economic market is not going to last like this forever. Let's go back to the chart from the Bureau of Labor Statistics, and what you'll see is that in August 2013, there were almost 3 unemployed people for 1 job opening. Today, there's more than 1 job opening for 1 unemployed person. When did this change happen? After the huge unemployment spike during the 2020 pandemic. That brings us to the natural next question. What happened during the 2020 pandemic, which was the worst recession that we have seen since the Great Depression, to create so many more jobs? And there's really only 2 potential solutions. Number one is that there's not enough people anymore to fill the jobs, or there's way more jobs that were created during the pandemic. Let's start by taking a look at the number of employees out there in America. Now, before we get into that, I wanted to briefly remind you that on August 15th, 2023, this year, I'm hosting my first ever virtual summit. It is on the 52nd anniversary of the dollar being taken off of the gold standard. And in this virtual summit, I'm going to be going over how the economy has changed, how money has changed, but even more importantly, how you can seize the new opportunities in this economy. There's going to be so much value in this live virtual summit. It's my first time doing it, but there's going to be a ton of value and a ton of things that I'm going to be going over. So if you want to join, there is a limited number of seats because the software that we have has a limited number of people that they can host on a live call. So if you want to join, make sure you click on the link down in the description below, reserve your seat and be there on time because there's a limit to how many people that can come. It's going to be a lot of fun and a ton of value. So if you want to check it out, I got the link for you down in the description. Now, if we take a look at the amount of labor that we have in America, back in 2020, there were 335 million Americans here. In 2023, that number had grown to 339 million people in America. So if our population is rising, that would generally mean that the amount of labor and workforce that we have in America is also rising. So the reason we have this flipped job market today as opposed to 10 years ago doesn't look like it's because we don't have as many workers today. That leaves us with option 2, which is we have more jobs available today than before the pandemic, which might seem a little bit strange when you consider that this pandemic was supposedly the worst economic downturn since the Great Depression. So how could we have more jobs created now than before? Well, thanks to your good old friends at the Federal Reserve Bank, the government, and the money printer. Between the years 2020 and 2021, the government created the PPP loan for businesses. They created free money through grants for businesses. They created bailout programs for other corporations. All this money creating and stimulus was a massive boost for the economy and bank balances because now you had all these businesses that went from kind of on the verge of bankruptcy to being okay to now all of a sudden, after this money printing, having more bank in their accounts than ever before. So now when you have tens of thousands of businesses with a pocket full of cash, what do? They're going to work on creating new jobs. They're going to work on opening new stores. They're going to work on creating new products. They're going to work on investing in research and development. They're going to work on creating new manufacturing. All of a sudden, we saw this huge, massive boom in the amount of jobs out there because businesses were given so much free money to go out and do whatever they want with it. Some people obviously did stock buybacks, but so many businesses had the ability to go out and create jobs and create new products. But the kind of tricky part with that is when businesses create products, they need people who can actually buy these products. And if you're going through this massive economic slowdown where people don't have jobs, how are people going to create money or have money to go out and buy the products that all these businesses are now creating? Well, the stimulus wasn't just for businesses. The United States government, with the help of the Federal Reserve Bank, passed stimulus bill after stimulus bill after stimulus bill, which created trillions and trillions of dollars of new money, new infrastructure programs, new job programs, new unemployment programs, new stimulus programs that way now people also had the ability to get some free money. In fact, many people during the pandemic were making more money in unemployment than they were working a job. Now think about that for a second. The government doesn't have any source of income. The only income that they get is from taxpayers through tax dollars. But already the government is spending more money than they bring in. That's why the government has this massive amount of national debt. That's why the government has this huge national deficit. That means they spend more money than they bring in. So the government doesn't have money to spend as it is, and then they're spending trillions and trillions of dollars on stimulus. Where does this money come from? The Federal Reserve Bank has to print it. So now the government doesn't have money to spend, but they pass these multi-trillion dollar stimulus programs, which gives free money to everybody. Now, all of a sudden, people who didn't have jobs, who weren't working, were getting these huge chunks of cash, whether it's stimulus checks, whether it's unemployment checks, and businesses have all this money to create new jobs, to create new products. That means all of a sudden, there's products out there, new products, new stores, and I got the money to spend. This was a field day for the economy. That's why we saw the economy boom then in 2020. We saw it boom in 2021. We saw it boom in 2022. And then once interest rates started to rise, it started to slow down. Now here we are in 2023 and everybody's wondering, are we going to continue to see an economic slowdown with the higher interest rates? Are we going to continue to see an economic boom? But this is where now, going back to the job market, you have to remember, no market, whether it's the stock market, real estate market, crypto market, gold market, no market can go straight up forever. No market will stay in one place forever. Today, we are in an employee-favored market. Employees have the upper hand because there are more job openings out there than there are employees. That means employees have more negotiating power. But that doesn't mean it's going to always stay like that because the Federal Reserve Bank is working to pull money out of the economy. They're working to raise interest rates. They're working to cool down the economy, and they're working to soften the labor market. They say that. What does softening the labor market mean to you? Softening the labor market means it can't be so tight. It's tight because, well, there's so many people, so many businesses that are looking for people. But if there's not so many businesses looking for people, there's not that many job openings out there. Now, there's more people looking for jobs than there are jobs. That would mean then the upper hand would go back to the employer. So what I want you to remember now is right now, employees have the upper hand. But it won't always be like that. And when it shifts back to the employer, if you live in a utopian world where you think everything should be your way and you're not willing to put in extra work, you're not willing to do the work, then things will get a lot more difficult, especially in the job market. Because if things were to flip, where the economy slows, people don't have jobs, and now only a few companies are hiring, who do you think the employer is going to want to hire? The person that's going to just keep complaining and not want to do the work, or somebody who's going to be willing to do the work? And that's a decision or a thought you might not have to worry about right now, but it's something you want to understand because job markets change, assets change. Nothing can go straight up forever, and things don't go straight down forever. And right now, the job market is starting to change. We've been seeing the layoffs. We've been seeing the cooling in consumer spending. We've been seeing the cooling in certain parts of the economy. And if that continues with higher interest rates, you have to understand that as an employee, if you want to maintain your health as an employee, you want to maintain your position as an employee, You have to be able to continue to provide value to the employer, because what happens when you see economic downturns is employers start to demand more productivity. Why? Because their costs are rising and their revenue is falling. So they're going to be doing layoffs. And when they do layoffs, guess who they want to keep? They want to keep the top performers. So understand that no job market can stay in one place forever, but I want you to understand how the job market is shifting. That way you can make the best decisions for yourself, your family, and your community. It looks like home prices are finally dropping. Let me read you the title of this article from Reuters. U.S. existing home sales edge up, but prices drop by the most since 2011. The article goes on to say that the median sales price was $396,100, which is a 3.1%